Hi, welcome to the Market Alert for Thursday, the 5th of January 2025. So FOMC meeting minutes last night, the news this morning, Santa Claus rally delivers despite hawkish Fed minutes and good JOLTS data. We'll come to the JOLTS data in a moment. Fed admits recession is plausible, pushes back against unwarranted easing expectations. So there's no easing coming. FOMC minutes were in fitting with Fed commentary, highlighting no Fed officials see rate cut in 2023. So no pivots. Stocks and bonds fight back against hawkish FOMC minutes and tighter labour market news. So let's have a look. Yesterday there was lots of news out on the low impact, as you can see. And what was interesting is the amounts that are in green, which were actually inflationary. But it didn't stop the market moving higher. ISM came out just slightly lower, but the JOLTS, which is a bit of a precursor, the ADP actually, which is out today, is a precursor to the non-farm payrolls, but JOLTS opening showed a significant increase there as well, and that obviously is going to give the Fed cause for concern. So plenty of job openings, and then we have the FOMC meeting minutes. Today we've got, let's have a look what we've actually got. The German trade balance should have been out. It came out at 2 a.m. Hang on, let me just check these times are right. That's more like it. 7 a.m, that's better. So we got German trade balance, final services PMI for the UK as well, and PPI Italian prelim, etc. But the big one, ADP. Yeah, thought it was a non-farm. That's tomorrow. ADP. That's the one that the market's going to be looking at today. Looking at 152,000 new jobs created, 127 prior to this. I can see what they're doing here. All the part-time jobs that were created in November and December are going to go, and then that 152 is going to look low when the figure actually comes out. See what they're doing there. Trade balance, final services, and natural gas storage, etc., etc. But the one the market will be waiting for is the 115 ADP non-farm payroll. Gold silver ratio moving back to the upside at the moment. For silver, had a bad day. Last night, not so much today, when it got absolutely monkey hammered because of the dollar moving to the upside, which we'll look at shortly. But first, let's kick off, have a look at the stock markets, and we'll start off with the Dow. So in the Dow yesterday, looks like a non-event, doesn't it? You can see there that the market's still holding at that 50 EMA and trying to move up on the overnight, but the 38% retracement drawn from here and back is stopping the market at the moment, looking very weakish compared to the other stock markets at this time. Need to get back above the 20-bar moving average, that 38, 50, 62, 78 and 89. And what's interesting, when we look at the DAX in a minute, you'll see how close we are to the recent highs. But in the 30 minutes, we sold off initially. We came back above the 200 MA and also Tuesday's close. We missed a day this week, and the market then rallying up. Then we've got the FOMC meeting minutes. We retested the low just after the close, and then the market now is sitting at the close and DP. So basically, the Fed are saying, well, look, there's not going to be any rate reductions during 2023, so get used to it. And that's not been really bullish for the Dow. However, in the German DAX, let's take a look at this. In the German DAX, no stopping yesterday, same as Tuesday, the market piling on the points, despite the fact that all of the services PMI numbers pointed and hinted in Europe to higher inflation. It made no difference whatsoever, and the market moving back to the upside. We're at 78% retracement there at the moment. Which you can see the market hitting this yesterday. We've got 89 above this and then the recent high. And if the Dow moves up and breaks out and goes through that 38 retracement, then there's nothing to stop this market going back to the recent high, which will be there, which you can see 14,676. In the 30-minute charts, you can see just straight up one bar, red bar. All the rest continuing to move to the upside. Then we had the FOMC numbers. Then we came back off that as well, and overnight we're heading back towards the close, and then we've got the high in the way there. We could see a bit of a pullback, 2 days straight up. Certainly, any bad news would send the market back to the downside, but we've got the non-farm payrolls tomorrow that the market could continue to move higher on for sure. In the 5-minute chart for yesterday, you will see, if I can just move across a bit, we sailed up from the off. There was no messing. We were up, we pulled back, we went up, we pulled back, we went up. It was just a constant ebbing and flowing of overbought, oversold, overbought, oversold, till we got to the open of the Dow, which you can see there, and market then moving back up with this, and then obviously overnight or in the evening we had the FOMC meeting minutes. Not much of a reaction from the DAX, and then overnight heading back towards the close there, which you can see at the moment. But we broke out earlier this morning. Interesting to see that we've got a bit of move down overnight, and then they've tried to bring it back. So we may see a situation where we trade up to this morning up to the high, and then they bring the market back as well, because there is weakness overnight in these markets there, particularly that the Fed is not going to cut rates now. Just a matter of that filtering into the market as well. Trade so far this week, 47349, 1088 on the profit factor, and win-loss we've got 76.24 in that sort of area. So yeah, so far so good this week. In the S&P also, you can see we're not moving much at all. We're still stuck in the Christmas sideways trading range for the US markets at the moment, and certainly when you watch both the Dow and the DAX, if you watch both of them on a 5-minute chart at the moment, the DAX is certainly much stronger, as is the FTSE as well. S&P obviously showing the same as the Dow at the moment, bit of a lackluster performance. Needs to take out the 20 bar, the 50 and the 38 in order to move higher. The market was sideways all the way through yesterday until we kicked off at 2:30 when the S&P opened officially in Chicago. Market trading up to Tuesday's high, then retracing, and then the FOMC meeting minutes again, which were retested before the close, and at the moment we're just sitting above the DP. In the FTSE, continuing to move to the upside, bit of a slower day yesterday for sure. Inside bar, market sideways overnight, and in the 30-minute chart you can see that we were down, and then we came back up, and then Sunak made a statement at lunchtime during PMQs. Market retested when the Dow opened, then back up, and then you can see just sideways and below the DP overnight at the moment. So a big contrast to Tuesday for yesterday's session, say an inside bar for the FTSE. Meanwhile, in the currencies, JPY moving higher yesterday as the FOMC news came out, sending the market higher. There you can see a nice move to the upside. Then we have so what we had was the market moving higher, then the FOMC meeting minutes, which moved the market slightly lower as the dollar moved higher, and you can then see the market at the moment trading at the close. Meanwhile, the pound stuck in a range inside bar for yesterday. A bit of supply in the market there as well, supported by Sunak's comments yesterday. 30-minute chart coming off the DP in the morning, which you can see there. Nice move to the upside, but then you've got the retracement to Tuesday's high. Market down. This is the news. The Dow opening at 2:30 and news at lunchtime with the jolts. And 3 p.m. was jolts, and then the market moving back, and not a lot to report. So the market's reaction overnight in Asia moving lower, which indicates that the dollar must be moving higher. So let's have a look at that. So in the dollar, down to the 200 MA, but overnight the market finding a bit of support there and moving higher, which is why we're seeing the pound move lower overnight. Let's just have a look at the daily chart of the dollar, and you can see there that we're stuck in a bit of a sideways move at the moment for the dollar index. Been like this since the festivities started. Yesterday's chart was completely wrong. That was for the December contract that's expired, which I thought was odd. So we've corrected that this morning. So yeah, the market's reaction predictable yesterday. So down for yesterday, but then rallying up, and then overnight, dollar finding a bit of strength there as well. And as you'd expect, if the dollar is up and bouncing after the FOMC, then silver's going to get hammered, and it did yesterday. Which you can see it was already under pressure with the jolts, and then in the evening the market was hammered lower down to the S1, down nearly a full dollar for yesterday, coming off that 24.50 area down to 23, so good 80 cents yesterday. Market's finding a bit of support overnight, needs to stay above the low. Meanwhile, gold completely the opposite, moving to the upside, and also sideways to higher overnight as well. A bit of pressure yesterday with the jolts and also the FOMC, but nonetheless currently above the DP level there. Okay, that is it for this one. Let's see what happens with those ADP numbers at lunchtime today. But the Fed's saying that they're not going to be reducing rates during 2023. We'll wait and see, won't we, whether they stick to that or not. Okay, that's it for this one. As ever, thanks for watching. See you in the next.